Namaste, I am CA Praveen Kumar, Director of planetFINANCE Business School, High Tech City, Hyderabad. In the last 1.5 years, we are seeing so many IPOs coming into the market for raising the fund from the public. That is called primary market. So I have done the video on Hyundai Motors Corporation, and I have done the video on Adani, and I have done the video on other companies who are coming for IPO. But later I realized if I am making the videos and people are watching, they will think I am knowledgeable. Of course, I am knowledgeable, but as a faculty, as a director, my objective is to make students knowledgeable. So it is not that I am knowledgeable, please come and join our B school. It is not like that. It is like I will make you knowledgeable, you can join the PGDM with us and you will also become knowledgeable. That is the idea which you wanted to create among the public. So in the same plan, what I have done is, I made students to prepare the IPO report of each company so that they will be able to share their knowledge, how they are able to perform in front of camera and how they are able to share their knowledge with you will be helpful for the audience. Okay. So let's move on to see. Today we have a guest with us, Chandraditya, who is from Chennai. He is PGDM student of our first year. Chandra, how are you?
So fine, sir.
So how did you get to know about our B school in Hyderabad?
My uncle friend is a student of your CA final.
Okay.
So through his referral, I got to know.
Fine. So all the way from Chennai to Hyderabad, how are you finding Hyderabad?
So well and good, sir.
Well and good.
Same like Chennai.
Same like Chennai. Here infrastructure, everything, and people are also really good.
Yes.
We do get the students from Chennai, Pune, Coimbatore, even from Orissa, even from North India, of Uttar Pradesh also. So the company what he is going to cover today is ACME Solar Holdings Limited. So we will see what is the business of the company, Chandraditya.
So the main business of ACME Solar Holding Limited is it produces electricity from various sources such as solar, wind, hybrid and FDRE. FDRE refers to firm and dispatchable revenue energy and sells the electricity to various central and government backed entities so that they can clear the power plants. They have various power plants in across various states, such as they have power plants in Gujarat, Rajasthan, Tamil Nadu, Madhya Pradesh, Uttar Pradesh, etc. And also they are planning to expand their operations. So that is the business of the ACME.
So this company is into power generation.
Yes.
Using various methods.
Yes.
But they are using the name solar, no?
Yes.
Why they are using only solar energy?
So most of the power comes from solar because solar is non-renewable. It is a renewable energy. So there will be no extraction of the sun. So they can get energy directly from the sun. So in India, therefore, generally the climate will be more high. So they can get more energy from the sun. By the way, they can produce more electricity, which will impact the electricity of the company.
So we have other companies in solar business like Suzlon, which is established player. How this company is different from existing companies and what are the strengths and weaknesses of this company?
So the main strength of this company is it has long-term stable cash flow because of its contract from central and government backed entities, and also it has the net profit of the company has grown from -3 crores in 2023 to 700 crores in 2024. But there is the revenue from operation has grown only by 3%. The main reason, it is an exceptional case where revenue from operation has grown only by 3%, but there is a huge jump in net profit from -3 crores to 700 crores. The main reason behind it is the main profit is came from the sale of the investment. So this is one of the strength. And the other strength is recently the government of India is also promoting the renewable energy sector. So they will be getting more subsidies and leverages for building this company. So the main weakness of the company is it has strong peer competitors, such as the peer competitors of this company are NTPC Green Energy, Tata Power Renewable Energy, Adani Green Energy, and recently we can see Var Energy also got listed. And also main weakness of this company is that it is basically depend on the environmental factors and also seasonal climate. If there is any adverse weather condition, they can't be able to produce electricity. And also it has borrowed loan, that is total cost borrowing of 8,400 crores, by which their fixed cost will be increased. So by issuing this IPO, they are trying to reduce the fixed cost so they can repay its borrowings to the subsidiary. And also one of the major weaknesses, 90% of the revenue comes from the top 10 clients. There is a risk of client dependency.
What is the issue size of this company?
The issue size of the company is around 2,900 crores. It is combination of both offer for sale and fresh issue. The fresh issue of the company is 2,395 crores, where the issue proceeds and expenses are borne by the company, whereas the offer for sale is 505, where one of the promoter of the company selling the shares to the public. In this case, the issue proceeds and issue expenses are borne by the selling promoter. The selling promoter in this case is ACME Cleantech Limited. So the issue proceeds will go to the ACME Cleantech promoter for 5,505 crores.
So it is coming under ICDR regulations, no?
Yes, sir.
It is coming under 6.1 regulation or 6.2 regulation?
So this IPOs comes under 6.2 regulation. First of
6.2
all,
because they might not have complied with the
6.1 regulation.
6.1 regulations. Because you said no, they have made losses in the last year. So basically 6.1 regulation means the company should have X amount of profitability and operating profit and dividend track record. There are 4 financial conditions are there. If they have changed the name in the last 1 year, 50% should come from new name. If any company failed to comply with the regulations, still they can come to public issue under 6.2. So as he was telling, this company was making losses last year. Now they have made it under 6.2 regulations of ICDR. What are the dates of IPO?
The issue opening date is November 6 and the issue closes on November 8 and the allotment finalization date is November 11, and whereas the refund and credit of shares to the demat account will be done 1 day after the allotment finalization date, which is November 12, and the listing date of the company is November 13th, which is Monday.
So how is the grey market, which is people are more concerned about?
So generally
the black market, right?
So
How is the
generally,
grey market premium for this stock?
so generally the investor apply in the IPO wanted to get the listing gains. So the listing gains can be, grey market is an indicator of expected listing price. Expected listing price is equal to issue price plus grey market premium. The grey market premium of the company is around 27 rupees, which is around 10% of the issue size. So the investor can expect around 10 to 15% of the listing gain.
Oh, fine. So that is as on today, you can say the grey market premium is giving
As of today, 5th November,
5th November. What is the closing price of grey market now?
27 rupees, sir.
27
Per
rupees.
share.
What is the price band of this company?
So the price band of the company is 275 to 289. It is
So assuming 289 plus 27,
Yes.
10-12% only the return.
Yes,
Grey market. If the market is stable for next 1 week,
yes.
if the market tanks in next 1 week, grey market premium will be negative, which we have seen for Hyundai Motors Corporation recently.
And also they are issuing employees at 27 rupees discount.
Oh.
So the price of for the employee quota is 262, which is around 3.2 lakh crores, computing around 10 CR.
Nice, nice, nice. So what company is going to do with this huge amount of around 2500 crores?
Out of 2,900 crores, only 2,400 crores goes to the company. Out of 2,400 crores, 75%, which is around 1,800 crores, they are trying to repay the fixed cost of the company so that they can reduce the fixed interest, and also balance 25% they are utilizing for the general corporate purpose, which might be of any use. So as per rules, only 25% of the issue can be used for the corporate purpose. So that they are utilizing only 25% and the balance 75% they are utilizing to repayment of the debt.
So their interest cost will be reduced next year.
Yes.
Thank you very much, Chandraditya, and hope you will be end up with the best job coming up in next 1 year. As the viewers might be aware, we complete the classes of PGDM 2 years classes in first year only, and second year we will be sending them to the MNCs for the placements. So that's where there is no ragging in our college. Why, sir? Because only first year will be there in the classroom, second year people will be in MNC. Okay. Thank you very much, and see you soon.
I am not a SEBI registered analyst, and it is only my views on the company, and it is only for the educational purpose.